The markets have opened with about a 0.2% gain, so 11,379.
21 points, 22 points higher, 11,375 is what we've had. 11,412 on the Nifty, and basically about 3 or 4 points away from the day's high.
It's a big move that we have on both the big indices right now, Nifty and Bank Nifty.
5.5% higher on Jet Airways as well. So plenty of names to count on the upside of the screen.
Bulls regain lost ground on Dalal Street after yesterday's sell-off. The Nifty gains 130 points from the day's low to end 1% in the green. Mid-caps and small caps also rise 1%.
The Nifty Bank Index gains over 600 points to end at a record closing high. ICICI Bank, HDFC Bank are the top performers. Nifty PSU Bank also rises 3%. Metal stocks, realty and energy also shine in trade.
The only sector which was down and depressed was technology. So the IT stocks underperformed in a strong trading session. Top brokerages like Nomura warn of essentially lower momentum in the banking and BFSI business on slowdown fears in the developed markets. Infosys and Tech Mahindra dragged the Nifty IT index lower.
Jet continues to rally and ends the day up around 7%. Aviation Secretary takes stock of the airline's operational plans for the next few months. However, brokerages remain cautious. DLF rises on the back of 3,000 crore rupees QIP with a floor price of 193 rupees per share.
Facing a takeover threat from Larsen & Toubro, Mindtree board cancels the proposed share buyback. Also sets up a committee of independent directors to evaluate, and I quote, the unsolicited offer from L&T. Well, those were the top stories which really drove headlines and news flow through the course of the trading day. Of course, there was a broader underlying momentum which was extremely strong right from the word go, and it only got stronger in the second half all the way into the close. Hello and welcome to a fresh new edition of Markets Today Talk Back. This is the show where we tell you all about what happened in those 6 hours of trading. I am Prashant Nair. With me, my colleague Ekta Batra. Hi, Ekta.
Hi, Prashant. Yes, absolutely. Well, over the next 30 minutes, as always, we will be talking about those top 5 market stories, and our guests will answer all of your stock queries as well. Joining us this evening is Sanjeev Bhasin of IIFL on the fundamentals and technical expert Mitesh Thakkar. Thanks, gentlemen, for joining in. But before I get to you in terms of all of the questions, Prashant, it turned out to be a day where we did see that momentum come through.
Absolutely. And, you know, I just put out some numbers which basically make the things absolutely clear. Over Friday and Monday, Ekta, the Nifty lost 167 odd points, right? And what was today's gain by close? Actually, it was 130 points, not 150. But, I mean, extremely strong gains, almost wiping out the severe losses that we saw over the previous 2 trading sessions. Same is the case for the Bank Nifty. It lost 551 points through the course of Friday and on Monday. I mean, those 2 days' losses combined. And today, it ended up 600 points higher from the low 660 odd points or so. So again, basically more than making up for the losses that we saw, both on the Nifty and the Bank Nifty. What really contributed to this? I mean, it was clear from the word go that global markets generally were wanting to keep aside some of the fear which had gripped markets starting Friday. I mean, the fear factor had really set in Friday's US session. And before that, I mean, the market here in Asia had sold off, and it continued on Monday. I mean, it was because of that inverted yield curve, what it could mean, recessionary fears. We had PMI numbers out of Europe. All of that pointed to a sharper than expected growth slowdown. It's not the first time we've had these signals. But, I mean, so far, if you go back the last couple of years, actually, it's been transient. I mean, it's not stayed for too long. And if today's session is anything to go by, it looks like the correction essentially was 2 days. It's too early to say whether this is, the pullback from the sharp cuts that we've seen over the last 2 days will hold or not. But if it does, then you're basically looking at the same kind of playbook out of which the market has been working from, which is ample liquidity, central banks being very supportive, and risk assets like stocks doing very, very well. Just a quick mention, Bank Nifty did well. Mid-cap, small caps once again started to participate. Both the private bank and the PSU bank indices did very well. Reliance saw a large move. It contributed pretty much all of the gains to the energy index, and it was the single largest contributor to the Nifty as well. I mean, you basically have got Reliance and financials participating in a big way, and it's and those have been the two legs for the market all this while over the last many weeks now. Ekta, but in terms of stocks?
Yes, absolutely. Well, you did mention financials. So State Bank of India, HDFC Bank, in fact, which was at a fresh high today. Yes Bank, ICICI Bank, Kotak, all of these stocks gained within the Nifty bank constituents. Outside of that, also, there was some amount of gains which came in from NBFC. So Bajaj Finance, Indiabulls Housing Finance, both those stocks were higher. Other gainers included Reliance Industries, NTPC, GAIL, Grasim. IT stocks were in the red today. So we had TechM, Infosys, Wipro, which lost out, and a couple of others included IOC as well as ITC, which were in the red. From the broader markets, there was a lot of momentum in stocks such as GMR Infra, Jet, because of the bankers now becoming the majority holders. So that stock was higher by around 6% Union Bank, which fired away from the mid caps. And on the downside was SpiceJet, which lost out. Remember, it's seen a strong rally, but that one came under profit booking today. Jubilant Life Sciences was sharply lower, down around 5%, and Allahabad Bank also lost out a little bit. But let's find out what our guests are making of trade today. We do have Sanjeev Bhasin, who's joining in, and Mitesh Thakkar joining in to give us their views. Mitesh, over to you then. What would you read today's trade as, and what would your strategy be going into tomorrow?
I think just a slight flashback, I think, on the index. 4 weeks of rally had seen the markets rally from move up from 10,730 to about 11,550, 570, and then I think what we are at least getting on the charts is that we've had a pullback, a 200-point kind of profit booking. 11,350, 330 levels broadly have held, though I think yesterday there was a mild intraday breach below that. But I think that's the first support area where a lot of averages and pivots converge. So that level is held. My sense is that we might be in for a mild time-wise correction, 11,550, 11,350 being the range. In case we continue going up beyond 11,550, then 11,700, 750 should come into play immediately.
So, Mitesh, essentially the correction has been short-lived and it is over.
Prashant, I think, I think price-wise correction, definitely I think damage seems to be done. I think yesterday's low in that sense should be an important pointer. What can happen is that we might retest the earlier highs and then drop off by another 100 points instead of 200 points this time. Spend about 2-3 more days in this range of 200 180 points and then eventually break out, because we've had 4 weeks of non-stop rally and we've had only 2 days of pullback. So that is something which is very difficult to guess. The idea is that yesterday we had advised buying around 11,350. We'll look to book profits close to 11,550, and then if there's a breakout and continuation on the upside, take a fresh long with 30-40 point kind of a stop loss.
Okay, well, let's get to the second headline for today then. Among sectors that were on our radar today, Nifty Bank Index gained over 600 points to end at a record high. Banking majors like ICICI Bank, HDFC Bank, Kotak were among the top performers. Nifty PSU Bank also rose around 3% Metal stocks, realty and energy also shown in trade. But we do have a caller then. We have Mr. Nageshwar joining in from Hyderabad, and he's on the line with a query on Vedanta. Hi, sir. Go ahead.
Yeah, this is Nageshwar. I brought 1,300 sheets of Vedanta. Its average cost around 90 rupees to me. So it's bought it around 5 years back. Just I would like to know, because it's past 2 years, the share is corrected from 350 to almost this it's now trading 150, 170. So whether it's good to hold or it's better to switch to some other this thing. Okay. Because now the stock still is not good. Metal stocks are not good now to carry.
Sure. You're a long-term investor. You don't mind holding Vedanta for how long?
No, already I'm holding it for the last 5 years. So okay. It was my profits are down for 50%. My now still I'm gaining in this, but still 50% as profits are cut down.
Okay.
That's why I would like to know whether it's good to buy, hold it or switch over.
All right. Okay. Sanjeev, what would you recommend on Vedanta? Buy price is 87.50.
Well, I think he has held it for a good period of time and made a lot of money. Yes, it's 50% down, but that's on the back that metals have underperformed, and there were some corporate governance issues with some of their subsidiaries being merged, which has irked a lot of shareholders. and particularly the institutional. I would advise, yes, get out of Vedanta. If you still want to be in the metal space, then Hindalco offers a better opportunity. But if you want to diversify, then we think select autos and banks are looking extremely good. So if I could suggest, I would suggest IDFC Bank first, DCB Bank or a federal bank, and select stocks like Ashok Leyland and Eicher Motors, where the price is an opportunity and macros are going to turn in the next 2-3 months.
Mitesh, you want to weigh in? Vedanta?
Yeah, I think the long-term charts don't suggest any significant outperformance or price gains. So my advice would be very similar to Sanjeev's. I think exiting would not be a bad idea. And I think, I have a clutch full of stocks in case the gentleman or investor chooses to exit and I think, move out. I think stocks like Torrent Pharma, Grasim, Century Textile, Power Finance Corporation, IDFC First Bank, Sanjeev also mentioned that. I think are looking extremely good on long-term charts.
Okay, Mr. Nageshwar, I hope that helps. Appreciate you calling in, sir. We move on to the third story of the day. IT stocks underperformed in strong trading. What was a strong session? This comes as brokerages like Nomura warn of lower momentum in the banking and BFSI business on signs of slowdown in the developed markets, which essentially is the main end market for Indian IT services companies. The IT index ended in the red, dragged by Infosys and Tech Mahindra. Let's quickly wrap out what these brokerages are saying, the concerns they're raising. Rima is here with that. Rima.
Nomura has analyzed the client data of the Fortune 500 company, and their takeaway is that BFSI appears to be weakening in US as well as in Europe. So take a look at the BFS US revenues for the last 4 quarters, and you can see the momentum has come down. In Europe, in fact, the BFS revenues of the companies have been negative for 3 out of the last 4 quarters. Insurance, which is the eye of the BFSI vertical, BFSI segment, that is doing quite well, with growth being 9%, 4% and 5% respectively in the last 3 quarters. This weakness in the BFSI outlook in US and Europe is pretty much tying in with what the companies seem to be telling us. So TCS told Nomura they believe the improvement seen in the last 4 quarters, with growth accelerating to 9% year-on-year, cannot be extrapolated and BFSI growth could plateau out. Cognizant says that they still see pressure in 3 out of the top 5 BFSI accounts versus pressure in all 5 accounts in the past. So the situation seems to be better for Cognizant, but still not out of the woods. Wipro says BFSI will moderate in FY20 to FY19, and they believe the 15 to 16% growth that they enjoyed last year in the BFSI vertical need not be sustainable on account of base effects and the discretionary nature of the demand. Infosys, on the other hand, continues to sound optimistic. So they spoke to CLSA earlier this month, where they say banking is doing well, with North America stronger than Europe. So net-net, the current market expectation is that growth will accelerate in FY20 vis-a-vis FY19. But if you purely look at the BFSI vertical, which is the banking financial vertical, over there the indicators appear to suggest that growth momentum may slow down or at best be the same as what we've had in FY19.
Okay, all right, Rima. Thanks very much for that. Well, let's get in a query now. Gaurav Chatterjee from West Bengal has written in with a question on Infosys. Holding 15 shares of the stock at 1165 a piece for the last 2 years. Long-term investor wants to know what to do, hold or sell that particular stock. 15 shares at 1165. Sanjeev, what would you recommend? We just heard that BFSI could be a segment that is probably going to see some amount of headwinds. We could see it come through in the next couple of quarters. But in any way, would Infosys probably be a long-term portfolio stock and hence probably look at it from that perspective?
Well, firstly, 1150 would be the come bonus price. I think he's made a handsome profit. If you took it ex bonus, it's 550 against the market price of close to 725. And I would definitely recommend selling and booking profit, because the two tailwinds of rupee and global growth may be slowing down. The rupee has been extremely strong, which means the INR dollar cash will not be on your positive side, and if there is a slowdown which is evident in US and Europe, then maybe outsourcing also takes a backseat. I would definitely advise him to book profit and get into banking, construction, consumption, which seem to be higher beta plays and where he could make more money in the next 2 years.
Okay, Sanjeev, thanks very much for that. We'll take a very quick break here, but here is a market opinion that we got from earlier in the day. So listen into that. We are back after this quick break. More questions with our guests.
I'd still like the IT sector. It's had a good run, it's had a nice pause, and I think it's probably ready for the next upturn going forward, because I do think the rupee is probably slightly overvalued. I think it should be nearer to 70, not 68.
As it stands today, the level of underperformance to large caps is as same as what it was in FY14. So that's the level of dramatic underperformance you see in mid caps. So we believe that there's no further downsides anymore. There could be a small downside here and there, but we think the trajectory is more towards an upward trend than a downward trend. Because of the pause in Fed rates, you could expect more flows to come into the emerging markets. Within the emerging markets, because India is more of a consumption story as against the other EMs, which are mostly export-oriented, and most of the exports happen into China, we think more funds will come into India.
Basin of IIFL and Mitesh Thakkar are joining in to decode the day's action and answer all of your questions. We're through with 3 headlines of the day, so let's get to the 4th story that we're tracking. The stocks in focus were Jet Airways, which continues to rally after yesterday's board meet saw banks deciding to take control. The stock closed with gains of around close to 7%. In fact, the Aviation Secretary Pradeep Singh Kharola met Jet officials today to take stock of the resolution. However, brokerages still remain cautious. Anisha Jain joins in with this street view.
Well, Jet Airways soared in trade today after the lender's resolution plan got approved yesterday. Now, as a result of that, not only 1,500 crore rupees would be infused immediately into the airlines, but also there'll be a new strategic investor coming on board. Because remember, Mr. Naresh Goyal and his wife have stepped out of the Jet Airways board. Other than that, there's also a bit of clarity with respect to the timeline as to when the strategic investor is coming on board. Because you remember, Mr. Rajneesh Kumar of SBI told us that he's expecting that by the end of May 2019 itself, there'll be a new strategic investor coming on board. And this gives a bit of business revival and continuity hope to the rest of the investors. Also, the stock was out of FNO ban today, and that is why we saw a big move of around 10 to 15%. Separately, the brokerages are also sanguine. For example, Citi says that with this temporary relief coming in, Jet Airways would be able to regain some of the lost market share. Because remember, the market share had fallen to 11% versus over 15% earlier, and hence there is a bit of hope of regaining that lost market share. Back to you.
Anisha, thank you very much for that. The other one was DLF, which rose in trade on the back of a 3,000 crore rupee QIP. I mean, you know, it's been planned for a while and now finally it's getting done. The company will sell 17 crore shares at a floor price of 193 rupees a piece. DLF said that the money will be money raised will be used to reduce third-party debt or borrowing. We've got a question coming in. Venkatesh C from Delhi has written in with a question on DLF. He's been holding shares of the company. His cost is 395 rupees a share. He's been holding them for the last 9 years. I mean, the stock is only now coming back to up to about 200 rupees or so. He wants to know if he should continue to hold or sell. I've been holding them for 9 years. Cost is almost 400 rupees. Sanjeev, you're sitting in a DLF land. What would you say?
Well, unfortunate that it's been such a long gestation and where to where markets have reached. But yes, truly the market has punished the players with large debt and where return on equity has declined. DLF is cleansing up its balance sheet. It will be in a new avatar going forward. I still think that, he should try and book profits or book part loss and get into a pedigree name like Godrej Property, which I'm very, very bullish and where he, I think, over the next 3 years may actually make up most of his loss. If he wants to be in real estate, if he wants to diversify, then consumption brands are looking extremely good and we could suggest some names there. But definitely try and reduce on any rally DLF and get into a name like Godrej Property. As a disclosure, we are very, very positive on Godrej and we own the stock.
Okay. All right. Well, Mitesh, what about you?
I like actually both Godrej as well as DLF. So I think you can continue holding. I think DLF in the long-term charts is now showing signs of turning up, which could see the stock head towards 250, 260 zones if you give it about 3 to 4 quarters. So for me, it's a hold.
All right, well, let's get to the 5th and the last headline for today. Latest in the Mindtree takeover tussle, the board of directors of the company have decided not to proceed with the buyback. The company has also set up a committee of independent directors to evaluate the unsolicited offer from Larsen & Toubro. Nisha Podar is here with the details. Nisha?
Just as we had reported, the two important things coming out of Mindtree's board meet today is first that they have decided not to go ahead with the buyback. And here the technicality was that Larsen & Toubro announced its transaction of buying out 20% stake from VG Siddhartha ahead of the buyback board meeting. So that means a public announcement has been made and the capital structure cannot be changed, and that will require a 75% shareholders nod, which is difficult. So buyback not happening for Mindtree. On the other hand, open offer has been announced by Larsen & Toubro today. It's going to be launched in middle of May, and before that, the independent directors committee that has been formed by Mindtree independent directors will have to recommend to the shareholders as well as the board on what they need to do. Remember, this is just recommendation, but given the corporate governance standards of the company, whatever they recommend, the board will probably have to look into that as well. So the tussle between Mindtree promoters as well as L&T seems to be ebbing a little right now.
All right, Nisha, thank you very much for joining us with those details. That's a story which continues to develop, but as Nisha points out, maybe it's starting to get, things are starting to thaw a little bit. Sanjeev and Mitesh, thank you very much for joining us here on today's Markets Today Talk Back. Ekta, with that, it's a wrap-up on this edition of the show.
Yes, absolutely. It's a wrap, and we'll see you again tomorrow. Have a good evening.